it's an incredibly, what I'll call mimetic market, right? Like I think I had this preconception of investors being this sort of swashbuckling group of contrarians when I started. And what you actually find is there's maybe 5 to 10% who are in that category.
Hello, fellow data nerds. My guest today is Anand Sanwal. Anand is the founder of CB Insights, a business analytics platform and global database of intelligence on technology companies. Anand was the CEO of CB Insights for 14 years and recently stepped into the role of executive chairman. Anand, welcome to World of DAS.
Thanks for having me, Auren. Big fan.
Now, I'm real excited. Now, tech is kind of a very narrative-driven world. What are some media narratives or widespread ideas about tech or venture capital that aren't backed up by data?
Yeah, you're totally right. It is very narrative driven and sort of very pundit driven, I would say. A few things that I think have surprised me about, the tech world as we've built CB Insights. One is I think it's an incredibly, what I'll call mimetic market, right? Like I think I had this preconception of investors being this sort of swashbuckling group of contrarians when I started. And what you actually find is there's maybe 5 to 10% who are in that category. And then everybody else sort of just follows the...
It seems all the deals are consensus, especially recently. It seems like everything's super consensus.
It's really interesting. Like there's probably...
It's like you either get like 10 term sheets or 0 term sheets.
Right. But even within a sector, right? Like we know that there tends to be a winner take all or winner takes most in many of these markets, but we'll still have something like 20 global payroll companies get funded, right? And not funded at like, $1-2 million levels, like many of them in the, 50 million plus $100 million plus levels.
So because things are so consensus, it almost leads to worse outcomes.
Yeah. Like once somebody who is proven invests in that area, it sort of becomes the signal that, hey, they've done the research, like we should go and find our version of that thing. So I've been surprised by that. I guess I was surprised. Now I'm no longer surprised, I think the other things that are not talked about a lot are that some are, the time to exit is just getting longer and longer. And it actually now doesn't marry well with fund life cycles, right? And so I think that's going to be probably already creating and will create kind of interesting dynamics when, a founding team is 10 years into building their company and the investors are looking to harvest it. And there's sort of this dichotomy or, divergence of interest maybe at times, but the time to exit keeps getting longer and longer. The IPO.
There does seem like already a fair big cottage industry of like funds buying stakes from other funds.
Yeah.
And so it seems like that is already kind of stepping in for some of those things.
Yeah, I think they're trying, the secondary markets have tried. That really hasn't taken off, I would say, but there's certainly a lot of attempts to do it. But I think that is one area. And then the other thing just related to the exits is that I think there's this selection bias in the exits that we see discussed and celebrated. Most of the exits in tech, if you exit, so this is, putting aside those that don't die, are sub 50 million, sub 100 million, right? So those really big outcomes are actually a lot more rare than we might imagine. But, I think the narrative tends to be one of, we celebrate and discuss the big winners, and then everybody else who kind of, might have made life-changing money for themselves in the early founding or the early teams, don't get discussed a lot, but they tend to be a lot smaller.
How does that marry up with like it seems like the YCC deals these days are, 25 million pre or post. If the more common exit is 50 or 100 million, it doesn't seem like it seems very hard for the investors to make any money there.
Well, I think, I think this is where founders and investors have a different profile in the sense of the investor is looking for that power law kind of return.
Yeah,
so
they just care about that one
if they get
thing.
that one, right, because they have this diversified portfolio. However, if you're a founder or an early member of a team, you only have one bet, right? And so you're more likely to not have, you may be that one that gets that $10 billion exit, but it's probably, if you're playing the odds, you're probably not going to be that. And so as you think about ownership and as you think about, kind of different protections that you might get in, that you might allow an investor to have as part of a future funding round, like these are just things I think to keep in mind. So, but again, like I coming in, I just had this preconception of like, oh, this is just this market that just generates home runs and grand slams all the time, and they're actually just not as frequent as we'd like to believe, or as much as we might like to hope.
Hello, fellow data nerds. If you're enjoying this episode, please hit that subscribe button. I would super appreciate you being a subscriber to World of DAS. Now, back to the episode. How data savvy is the average venture capital investor?
The average venture capital firm, by definition of being average, is not very data savvy. That's probably why they're average. I think what you'll see with average firms is they'll look at something like App Store downloads or web traffic, and they'll be like, "Ooh, graph goes up. That's a good company." And they'll like call that data science, and then they'll come up with some narrative about how they have a tool that helps them do this, and they'll, it's good marketing to help separate LPs from their capital. And then for those average VCs, like those LPs will never see any of that money back. I think we have the benefit at CBI of working with like what I would regard as many of the top venture investors. And I'd say it's not VC as an asset class is sort of expanded. So it's the traditional VCs, but you've got corporates, you've got hedge funds, you've got sovereigns, you've got mutual funds. So there's a bunch of it's a more eclectic group, but I think some of them are using it in really data and intelligent ways, but I'd put them in the above average category.
What's an anecdote of like an investor that's used data in a super intelligent way?
Yeah, so I'll give you a couple of examples. So if I break down how the VC process works, it's sort of the circle of life is see the deal, assess the deal, win the deal, nurture the deal, right? And so I think a lot of the focus tends to be on seeing the deal. And that tends to be, let me find the signal. And if the line chart goes up, that's a good company. So I'll give you a couple of examples of seeing the deal. The one I like the most, which one of our customers I know does very religiously, and the term we use internally, or the term I use, is lineage tracing. So what they do is they're obsessed with all the deals they didn't see that they wish they had seen. So what they will do is they'll use us and they'll look at their peers who did a deal, let's call it a seed or Series A deal, and they'll just do a comparison of what companies their peers had done that they had not had in their own CRM. And then what they'll do is go back and look at, okay, where did that company come from? Did it come out of this accelerator? Was it funded by this angel investor? And they'll use CBI to figure that out. And then what they'll try to do is go build relationships in those areas so that that never happens again. Right. Yep. And so I think like that's a really, they're a top tier fund, and they're like still humble enough to know, or humble enough to say, hey, we miss stuff, and it makes us mad when we miss stuff. And so they kind of go back and do this all the time.
Because it's like, you can't be in the deal if you've never seen it, if you don't even see it in the first place.
Yeah. Yeah. And I think, but elite firms sometimes might feel like, well, I see the best stuff. Right? Yeah. I thought this was like a really rigorous way of making sure you never miss. So like, this kind of going back and figuring out the lineage, I think is really interesting. I'd say the other ways that people use data to see the deal, one is like from a thought leadership perspective. So yeah, Matt Turk at First Mark, right? Like he came out with this crazy AI landscape, right? And used CBI data for that. But I think that's a really interesting way of, kind of being this lighthouse for founders and companies in a space to say, hey, listen, we know this space really well. We really care about it. And then, using kind of data and thought leadership to attract the right types of founders for you. And then, when we see customers doing stuff with our data like that, we love it, obviously. And so then we'll distribute it to our newsletter, which goes out to 600,000 or so folks. So, hopefully we can amplify that. So I think that's another thought leadership way. And then I'd say
it's just content marketing, essentially.
Yeah. But like using, data to say like, hey, we care about this market and we've spent time to understand it. And here's some things we've seen. And I'd say the final would be using what I would call non-traditional signals, or mashing up traditional signals with non-traditional signals. So looking at things like commercial transactions. So which companies have a lot of vendor partnership, customer signings, headcount growth, coupled with maybe, when they last raised. We have some scores around like management quality. So, I think folks will use that data. They'll maybe combine it with existing data they have, and maybe they have their own model. Those are, I think, interesting ways of seeing the deal. Then if we shift to like,
what type of data like on a company do you wish you had, but you just, it's just too hard to get, or something like, gosh, God, if we could only have this kind of data, like, or people have asked you for this thing, but it's just incredibly difficult to get.
Yeah, probably the one that folks ask about is market share, right? So within a space, let's say there's 10 players, right?
Mm-hmm. Who's rising, who's falling.
Yeah. And how is that trending over time, right? And I think there's some interesting.
That's really hard to get that.
Yeah, okay. Really. And, so yeah, like it's sort of like a measure of velocity and traction. So there's
back in the day, like if you were like, if you're selling like an ATS to a company, you could like crawl all the companies and see if it's on the website. But if it's like an internal dev tool or something, there's no way to crawl that. There's no way to know, except, maybe you like check for like new connections on LinkedIn, and they made a connection to Macy's. Maybe they're selling to Macy's now or something.
Yeah. So we have commercial transaction data, which says they're selling to Macy's, right? But what we don't know is, was how big of a deal was that, right?
Like, how do you have that data? How would you know? Because you survey?
Yeah, so we do two ways. We get what we call them analyst briefings. So companies will submit information to us about their customers, and then we'll validate that with the customers. And then we also will crawl media, their websites, and identify, press releases talking about XYZ just signed with McDonald's, and, it's a POC, or it's a full-blown deal, or it's a partnership. So we collect all of that data. So what we try to do when data like market share is really hard to get, we try to say, okay, what are proxies for it, right? And so that's a proxy for it, right? If we see that coupled with headcount growth, coupled with top tier investors, we do interviews with software buyers. So if we see that, the CSAT scores in those interviews are high, like those are all indications of something that's good. And in those interviews, we'll often ask, hey, who else did you evaluate? Right. And so we get a sense for at least who's winning in the deals, right? Again, it's not exactly market share, but, when you take all of these things and combine them, I think you get a pretty complete view of what might be happening with the company and with the market.
It's interesting because a lot of these vendors kind of go together. So people who buy this vendor tend to buy this other vendor, even though these vendors may not have any type of partnership or any type of thing. Like if you look at like a DNA strand of a company, if you just looked at all the vendors, like every company is unique, but they can kind of slightly rhyme with one another. And I imagine it could be like quite predictive if you could see company A is doing really well, and like, okay, company B is usually like 1 year later selling to the same companies as company A, then that might be also a good time to invest in that.
Yeah, absolutely. I think what we've actually seen there is it is really predictive of M&A, right? And so what we actually find is some strategics that just have a tendency to sort of try before they buy. And so you'll see a partnership or a
right. Salesforce, for instance, almost always partners before they buy the company.
Yeah. Salesforce, there's a bunch of healthcare, pharma companies that do that as well. And so we'll see that pretty regularly, where it'll be you'll see a number of partnerships sometimes with, one strategic, within a category. So maybe they're trying a few different players out. So you now are starting to figure out, okay, they're likely to make a move, at least in this category. And then sometimes what you'll see is one of them went from proof of concept to full-blown deal. And then that probably becomes your favorite for a future acquisition. So yeah, there's a bunch of things, like to your point, around things that get bundled together that you could look at. I'd say like our customers tend to look at that information from the perspective of predicting future M&A and predicting kind of competitive strategy a lot. So yeah, it's really, really useful from that perspective as well.
Now, if you think of a data company, there's one thing. Okay, there's data companies that just sell data. high quality data.
Yeah.
And then there's other data companies that will build an application on top of that data so that more people can access it. You guys do both,
Yep.
right? You both sell data and you've got an application. Do you have some belief maybe one is better than the other, or you can do how do you think about that if you were advising so many people listening to this today that are building data businesses? How do you advise them to get started?
Yeah, so I don't know if it's an either or, right? I think some folks want pure data and they want to assimilate that into their own models and applications. Some people
and this would be a little bit more of a sophisticated customer.
Definitely more sophisticated, right? And then some people want the data to be sort of more processed and they want maybe to serve up the insight on top of it, right? I'd say generally what we found is people will start at the more processed level.
In the application.
Yeah, in the application, in the terminal, we'll call, and then they'll move to maybe more the API product, right? I think having both is really, if you can get somebody on both SKUs, right? What you've done is you're now clearly part of their workflow. Your retention is going to go way up. Your NRR is going to go way up. So I think if you can have both that 1-2 punch, that's great. Not everybody's going to be ready for integration into a system, but I would say what we have been finding is increasingly, in the beginning of CBI, the customer was a person on the terminal doing something. Increasingly, the customer is other software that is just ingesting the data and doing things with it that obviously people are programming. But yeah, I think there's a lot of opportunity to do both. I think with AI, it probably changes that even more, right? I think the insights on top of the information, because generative AI especially does this amazing job of it's just this phenomenal compression engine. And so I think the terminal sort of will change from being from we'll call it a vertical search engine at times. Sometimes these data companies will resemble that to more of an answer engine, right? And so it'll proactively serve up things that you care about because it knows things about you based on your company and things you've done in the past in the platform. And so I think that's a lot of the future of how data is going to be interacted with and consumed is going to be it's going to be served up to you, and it's going to feel like you have your own personal data analyst who's just kind of always on and always able to do just phenomenal things.
When we started SafeGraph, I had thought that companies were going to grow their kind of data science and data management capabilities much faster. If you look at just the number of real buyers that really spend a decent amount of money buying data today, it's a little bit more than it was 5 years ago. But I predicted it would have been 10x more, and it's grown a little bit.
Yeah.
Why do you think it hasn't grown as fast as at least people like me predicted back 5 years ago?
Yeah, I'd agree with you. It's definitely grown slower than might have expected. I think it's grown in certain pockets, right? So hedge funds, use it. They
but still I don't know, there's less than 100 hedge funds that really buy any serious data.
Yeah,
if you think of Bridgewater, which is one of the biggest hedge funds in the world, the amount of data they buy is minuscule. It's so small.
Yeah.
As a percentage of their AUM, it's basically it's not even a rounding error.
Yeah.
Most of these, you're talking about 0.72 Citadel. You're talking about this very small number of hedge funds that really buy any real amount of data.
Yeah, I'd agree. I think part of the challenge with these efforts is that data science capabilities and roles in these large organizations, I think generally is regarded as a back office function, right? And so I think part of it is just really great data science talent wants to be closer to the product and the customers that it impacts. And so in large orgs, part of it is I just don't know if they're going to be able to get the quality of talent to really do data science well. And then I think the other thing in large organizations, and I'm probably a little bit more enterprise oriented in this comment, is that I think these data science efforts often feel like skunk works.
Yeah, it's so they buy it and they don't, it's not a recurring revenue thing or something.
Yeah. And they're hoping it generates some sort of alpha, right? And if it doesn't, when the economy turns or cost cutting has to come into play, it ends up being the first thing that's killed, right? And so, I think part of it is that it is often driven by somebody who is data curious and conversant in data, but they actually don't have and so they just want to play with information and data. They haven't really syndicated internally. Here's the value of what I'm going to do. They're just kind of throwing out we're going to have a data science capability, but having a function is not value, right? You need to articulate, here's what it's going to help us do, and it's going to help us grow revenue, cut costs, reduce risk, right? And if you're not talking in that language, then you're just sort of this nice little fun science experiment. And science experiments they don't last generally.
Yeah, we saw that even in 2022, where it just started separating, where we had customers who were clearly getting value from the data. And then there's companies that are oh yeah, this is kind of interesting. And half the team we sold to got fired or something.
Yeah,
and
absolutely.
Those were the churns that happened there. And in some ways that's our bad, because we didn't, we should have done a better job of understanding that customer and really trying to make sure that they got the right value from it, or really helping them get value faster.
Yeah.
From those types of things.
Yeah. I think that the point you raised at the end there is really important, because those prospective customers are often sometimes the most fun to speak with. Right?
Yeah, because they're doing cool stuff.
Yeah, they're doing cool stuff. It feels like they're speaking the same language as you. And so you can actually burn a lot of cycles as a team and as a scale up or a startup trying to get them on board, right? And
and they might need a little tweak or something.
Yeah. And so you end up taking your eye off the ball a little bit, because you're oh, this could be such a cool application. And if they get it in, it could grow to 10,000 people in the enterprise. And you can it's very easy to get ahead of yourself. I know we've made that mistake, but
I'm 100% guilty there as well. Yeah.
Yeah.
That's super. Yeah. Now, I'm really interested in the idea of data exhaust businesses.
Yeah.
They haven't really taken off the way I would have thought they would either. Where you've got a company, it does whatever, it sells widgets, but you've got this, it's generating this interesting data. It might not be core to the business, and then maybe selling it to somebody else who could use it.
Yeah.
How do you think about that?
Yeah. So I love this idea. I call them sawdust data, right? It's I think the challenge, so I think somebody could build a business here of going to organizations who have this sort of sawdust and building businesses and licensing that data and creating businesses off of it. I think for the company that is creating the sawdust, I think the challenges are a fewfold, right? One is oftentimes they just don't recognize that they have interesting data exhaust, that they're creating the sawdust that has value, right? So part of it is just a recognition of they're not recognizing that value. That is driven, I think, mostly by the fact that it's not core, right? They're running a business. And so this data exhaust thing, it's just not something they're thinking about. And when they do think about it, I think oftentimes when I talk to folks, they're oh, that's interesting, but is that a distraction? And is that going to be a lot of brain damage to do that thing? And then I'd say,
it's interesting because I've had the opposite experience.
Oh, really?
I have sometimes they think it's way more valuable. Oh, this is going to be worth $500 million, and it's worth $5 million, right?
Yeah.
And so it'd be a nice they could license it for $5 million, make $4.8 million in profit, which is really nice, and just kind of manage it. But then they have this kind of much bigger, their eyes get so much bigger, and then it never happens because they think they have to invest too much in it, or they think they have to, it never really kind of goes anywhere.
Yeah. I mean, I think, when I've spoken to folks at relatively large enterprises who I think have interesting data. And, for them, it's they're always thinking about, is this a needle mover, right? And so in the context of the size of their business, this generally isn't perceived as very large.
It almost never is a needle mover.
Yeah. And then I'd say the final one is reputational concerns, right? Is that if what they're licensing or putting into a product, it might be totally mundane, it might be totally safe, but there's this worry that even if there's a perception from customers that somehow their data is going to something.
You don't want to sell data about your customer.
Yeah, this is some clandestine thing that's happening. And so it's you got this challenge of, hey, this might not even be a big opportunity, and now I'm going to take reputational risk that might even be just all about, might be, bad perception. Is it, again, is it just is the brain damage of it worth doing? But, I do think there's an opportunity here, but somebody just needs to go in and, really kind of alleviate those concerns. yeah, I think there's like a big business to be built here, kind of incubating these sawdust data businesses for sure.
Now, if you think of companies that sell data, there are not very many of those that have become unicorns in the last 20 years. There's probably 2,000 SaaS companies that have become unicorns in the last 20 years. And I don't know, there's ZoomInfo and maybe one or two other data companies that have hit that unicorn status. Like, why is it so hard to build like a really big data business?
Yeah, so I don't know if I might disagree a little bit on like the underlying premise, right? Because I think if you look at S&P, FactSet, Bloom.
Wait, but all those were built like 50 years ago.
But I would say like a lot of their, they continued, well, not all of them, but some of them have continued to innovate quite, dramatically.
They're incredible companies, and many of them have regulatory capture and other types of reasons why they're so good.
Sort of newer companies.
Like if you're a VC and you only invest in data in the last 20 years, like you really missed out. Like you could have done so much better investing in SaaS.
Yeah. I mean, I think what ends up happening is that the data is not, maybe in a lot of these businesses, like the data is not the core product, right? Like the data they have is an ingredient to solving some other problem. And so they're not positioned as data companies. But yeah, I'd agree. There haven't been kind of, if you think about pure play data companies, there haven't been major exits and major outcomes in the recent past. I do think like data as a vector for like differentiation is going to increase. And I think GAI in particular is going to allow a lot of like interesting data businesses to be built. The thing that I'm most interested in or most excited about is I actually think with the things you can do with GAI, you can actually build really big data businesses with very few people going forward, right?
Mm-hmm. So, because if you have to link data or merge data or crawl data, like all those things are probably things that like an LLM are quite good at.
Yeah. Like, I mean, I've been playing around like some of the data labeling and extraction stuff that you can do with LLMs is remarkable. Right. And like that used to require.
And so much of data companies are just like an ETL and just like data munging and stuff.
Yeah. And so all of that sort of dirty work that you often had to do that required people to train and label data, like, now you can do that really, really quickly. You need domain knowledge probably to know what questions to ask and how to get to that data. So I actually think we're at a unique moment right now where there's going to be some really large data businesses built with very small teams. I think that's a really interesting
But
thing.
In some ways, then you don't really need much capital to make, or maybe you need it for like data, making proprietary data deals or licensing data or something, but you don't need that much capital because the main costs in the past were having really talented engineers.
Yeah, it'll be, you might raise capital to blow out go to market, right? Like once you have fit. But yeah, I think, and even there, like, I think with PLG and APIs and other things, like you might be able to get quite far. Obviously enterprises want sort of that high touch, but yeah, you might be able to get quite far without a lot of that other kind of, the sort of what legacy companies have generally have to build. So yeah, no, I think.
Now, how else should like data companies be thinking strategically about the rise of AI?
I mean, I think the biggest one, in my opinion, is around this sort of like autonomous research analyst, right? I think getting the data embedded in workflow is really important. And so, you're gonna know what the customer cares about, and then you're gonna serve that up to them in the format and in the place that they find most valuable. So instead of having to come to the terminal, if you live in your email or you live in Slack or you live in your CRM, it'll get served up to you there. And it won't be just served up to you as columns and rows. It'll be served up to you. If you like it like that, you can get it, but it'll be served up to you in a narrative form. And so I really think this idea of like your own personal data analyst is really, I think increasingly that's going to be where the world is going. I think right now what everybody's doing is coming out with their own chatbot. And I don't think that I think that's maybe that's like a bridge to the final destination, right? I think the ultimate destination is like you just feel like somebody is sending you the personalized thing that you need to do, right? So for our customers, as an example, it's been kind of eye-opening. A lot of our customers, when let's say they're in competitive intel, a lot of their work is compiling information and sharing it with the rest of the organization, right? Like think of it like an internal newsletter, right? Hey, I work at big automaker. I need to know what Tesla and Ford and our competitors are doing. There's a lot of, it's sort of another kind of data munging that goes on. And so there's actually very little, you spend so much time data munging and you spend very little time actually analyzing what's going on. I think that data munging work can be done, again, proactively and on your behalf and just sent to you. And then you become less of a creator and more of a curator and editor. And then you're off analyzing and doing things that I think humans are obviously more qualified and more capable of doing. So yeah, I think that's where differentiated data companies are going to be going in the next, 5-10 years.
It seems like, if you think of just like the average information worker, it seems like so much of our time is just like clicking on things. It's moving from here to here and going to this application and clicking around. And if you want to go into your CRM, it's like 15 clicks to do anything. Like it seems like though all those things, at least you could have an agent in the background helping you get that information faster, doing those things for you, et cetera. And that will hopefully get us having like a lot more time to actually either be creative or do our own analysis or do other types of stuff. Or do you think that that's a world that's happening and do you think that's going quick, or do you think that's more like, okay, it's in my fantasy?
Yeah, I think that area is certainly already kind of happening, right? I think that's sort of automating the existing workflow, right? I think what's as interesting as that is doing things that make you bionic that you couldn't do before, right? And so what that looks like is,
instead of just having a team of humans that could have done it, now you do things that like no human could ever do.
Yeah, so like we're about to like put quarterly earnings filings and presentations on our platform. And so, what somebody might do previously is an analyst might look through a competitor's quarterly results and, do some summary of it. Right. Mm-hmm. What's really hard is to say, hey, actually now tell me over the last 12 quarters, like what parts of their strategy have stayed consistent and what has changed. Right.
Yeah.
Like, they just couldn't do that. Right. Or it would be like a multi-week effort. And so there's like new knowledge that actually gets created by having access to all of this information and sort of combining it and organizing it appropriately. And I think that's what's, like, there's new insights here that I think like just people haven't seen before. And then, to your earlier point, there's just a lot of sort of those mundane clicks around and let me go copy paste this information into the spreadsheet. Like that stuff's certainly going to go away. But I think the new intelligence is actually like coming fast. And I think that's going to be really compelling and really valuable to organizations and to people as well.
Yeah, because you have these you've got all these earnings calls. You've got expert networks like Tegus or something like that. You have just like tons and tons of data, transcripts, people talking about certain things. Like it does seem like, and reading all those takes a really long time. And then like being able to sift through it. All these things seem like perfect for some sort of AI agent to help you do all those things.
Yeah, I think the key there is like you have to be very clear up front about how you're going to organize even something like a transcript, right? So when we do a software buyer interview, it's very structured. So we always ask about how much did you pay? What's your intent to renew? What's your
because you're doing it rather than having someone else do it. You're doing it yourself.
But the reason our interviews are structured is because then with GAI, you can actually go and start it makes it easier for it to pull out the requisite information. And then you can actually create structured data kind of products around that. And it reduces the risk of sort of hallucination, right? Because I think that's the other big thing is, again, for us, when you're selling into an enterprise, like you want to make sure somebody doesn't go into a meeting and get pantsed, right? Like they have to feel good about the information that they're putting in front of their board or in front of their boss. And so structuring, even in some sense, like having even your unstructured information be sort of semi-structured makes that a lot easier, right? Versus it just being like a free-for-all kind of interview style. But yeah, I think like there's a huge opportunity in unstructured information and extracting structured signals out of it.
And what do you think about these future of these expert network? I call them all expert networks, whether it's CB Insights, obviously Gartner does certain things, TGIS, GLG, Alpha Insights, et cetera. Like, where do you think all these are going?
I mean, I think, so there's like I think what the service they provide is very important, right? And some of it I think is people perceive it as being valuable, right? Because if I read it online, I feel like everybody's got it. If I talk to an expert, I feel like only I had it. So there's a perception of of uniqueness that I think is really valuable there. I think the model of having transcripts and then being able to have scale with those transcripts is ultimately a better business than coordinating and facilitating one-on-one conversations, right? Because it just becomes an asset that you can build once, sell multiple times. And then I think if you structure those transcripts appropriately, you can actually create all sorts of derivative assets off of them that I think is really valuable. So I think the idea of conversations with experts or software buyers or what have you, I think is very valuable. I think like how you go to market with it, there's certain ways to make it more valuable. I think the other thing is I do believe there's going to be like vertically specific transcript services, right? And so I think like, within healthcare, if you want to understand the efficacy of a drug and you want to talk to doctors, like I believe there will be, or maybe there already is, and I haven't seen it, a service that interviews doctors and all those transcripts are available. And so you can now see like what 1,000 doctors feel about a particular drug and what they're saying, right? I think there's going to be, so I think if you pick high value verticals where people are making big kind of decisions off of that information, I think there'll be a lot more of those versus these sort of general purpose, these general purpose kind of systems. Because I think what you need there is you need density of coverage, right? Like having 5 interviews with doctors and then having, 10 geopolitics experts who talk about the Ukraine and 7 who talk about what's going on with Snowflake. Like you don't have density. I think if you can go really deep on particular verticals, then you can like you
especially if you structure it, because and you're always asking these doctors about the other stuff as well. So because if you're only asking about one drug, then it's hard to, but if you get them on the phone and you ask them about like 15 different drugs and 15 different medical procedures and other things, then you can get that learning much faster.
Yeah. And I think, you then also get out of this rat race of recruiting experts all the time, right? Because you build affinity in a relationship with, let's use the doctor, or in our case, a software buyer. Like we can, we know if you buy Salesforce, you probably bought a bunch of other sales tools, right? And so we can go back to you and talk to you about your experience with all those. And we can go back to you when you told us you were going to renew Salesforce to see, did you actually renew and what did the price look like in that following renewal? So there's a bunch of things that you can do by going deep that I think reduce some of the other, like I'm sure you get them all the time on LinkedIn, these sort of spam messages from these networks about like, hey, can you talk to us about this company, right? And like that's a non, like it's a relevant cost, right, that they have to incur to recruit experts constantly. And so if you can reduce the amount of sort of expert recruitment that you have to do and just go deep with a particular set of doctors or software buyers or what have you, I think there's an immense amount of value to be built there.
I've got this scam I want to create where like it understands your voice. And then it does all these expert calls for you on the side. And so you could have like you could have like 5 expert calls every day with like, and you're not even having to do anything.
Oh, you just got to get like
you just earn all this passive income on the side.
That's all right. So you've just taken it to a whole different level. Yeah. I think if you got like, what is that, 11 Labs or whatever, right? You
totally.
Like, get one of those AI avatars, train them on your voice and just like load up.
You could just talk and then it's such a smart LLM. You literally could talk about anything. So it's like, I could talk about software, but I also could talk about like the deep neuroscience that's happening. Right? I mean, and you're just like, you're just a smart guy. Everyone's asking you all this, and you're just making all this passive income on the side. You're just
so
on the beach.
Got like your Auren 2.0 who's just out there doing expert calls all day.
Just making all this big for you. Yeah.
All right. Well, that'll be I think GLG was supposed to go public, and they're going to have to put that into their risk factors now when they issue their next S1.
Another risk that I saw. So recently, I went on one of these things and looked up SafeGraph, and I saw these two buyers who, talked about their experience being SafeGraph customers, both of which were at companies that I would love to have as clients, but were not our clients. And it's so I feel like at some point, like, we've certainly talked to them, tried to sell to them, but and they've talked like they've been our client for years. They said all these nice things about us, which is very nice.
Yeah.
But like they clearly were not our, like, we have inside knowledge, like we know who our clients are.
Right.
And so either these expert networks were changing the name of the company, instead of like Coke to Pepsi or something like that, to keep them more anonymous, or there's a lot of fraud on these things. I don't know if you have any ideas about it.
I mean, we haven't seen that. And part of it is like, we do a lot of vetting up front, right? Like we ask a bunch of questions and we kind of kick you out of the process. There's a whole Reddit about like how to get expert network survey calls, like, so there is like people who are trying to hack.
They literally just do it as a passive income.
Yeah. And they're asking questions like, hey, who's the least strict, right? Or, hey, I found this hack to get around this. Or, hey, here's a survey that pays $150 if you take it, and you just got to answer their qualifying questions this way and you'll get put through, right? So
or you could just earn like $1,000 a week or a few $1,000s a week on the side.
Yeah, I mean, I think like, when people will try to find, easy money when it's available. I think it tends to be more on the market research survey side of things versus the call side, I would say, from what I've observed, right? Because they're, as soon as you have to get on the phone, you can get exposed a lot more quickly. And then I think you get paid based on the amount of time you're on the call. So I think people tend to be trying to find ways to get those surveys where they get paid, whatever, $150 for just, kind of checking some boxes generally. But yeah, there's a little mini ecosystem of people who are trying to game those surveys and make a little bit of extra coin for sure.
I love learning about these scams. It's very, very fun.
Yeah.
You actually just stepped down as CEO after 14 years.
Yeah.
Like, how did that, I would love to like walk through that like thought process. Like, how do you know it's time to step away as the leader? I mean, obviously you're still chairman, but how do you know when to do that, and how, what was going through your head? How did you plan for it, et cetera?
Yeah, I think it was, I try to be pretty structured in decisions, especially big ones like this, right? And so my framework was simple, but I think effective, right? It was sort of on one axis, I thought about what do I like to do and want to do, right? And so, and people have different frameworks of that, the sort of the zone of excellence versus zone of competence type stuff. And then on the other axis was what the company needs. So if I break that down, right, I think on what I like to do, I'm sort of a product founder, right? So I like the new and novel, right? And the company had scaled to a point where it needed systems and repeatability.
It's more one to N than 0 to 1.
Yeah. And so, and as I thought about, okay, how do we get to 300 million, right? Like, it wasn't clear that as I thought about what would be required of me, it wasn't clear to me that I would enjoy that, right? Like, I like being outside the organism, right? Like, I like talking to customers and I like thinking about product and thinking about content. So on that axis, it was like, hey, listen, what the company needs, or what I like to do, I'm maybe on the low end of that axis, right? And then the other one was, what does the company need, right? And I think there's different adages. It's the one I like, different wars need different generals. I think founders often ask that question about everybody else on their team,
except for themselves.
Yeah. So they'll often say like, oh, so-and-so was great VP of sales from 0 to 1, but from 1 to 5 million or 5 to 10, are they the right person? It just was, I think it's the right thing to do to also ask that of yourself. Right. And so I asked that of myself and said, hey, listen, I think, if I assess myself on that same dimension, I don't think that's, I'm what the company needs. Right. And it was one of these things where I thought, okay, I know the things I need to work on. Should I spend my time trying to shore up my weaknesses, or should I lean into my strengths? And, then when you go back to what I would like to do, I was like, I really don't want to spend my time trying to shore up my weaknesses. And so, I was probably low on the what the company needs axis as well. So I was kind of in the perfect quadrant for, hey, it's time to make a change. And so it was something I
how
thought
did you
about for
go,
a while.
how did you figure out like what that company needed? Because then it's really, okay, I got to replace myself with someone. Obviously there's probably some great internal people. There's probably some amazing external people.
Yeah.
Like, how do you then like make that decision?
Yeah. So once I knew that I thought it made sense for me and the organization, then it was sort of building out the profile, I think, of what this potential CEO would look like. And so I had some kind of hard criteria and some things that I would need to assess in our conversations, right? So one was I wanted somebody, if I think of CB Insights as being at stage N, I wanted somebody who had experience growing a company to the N+1 or N+2 stage, right?
Yep.
I didn't want somebody who was like, N+20, right? Because they
Yeah.
just don't have like muscle memory for what we need. So that was one. Somebody who has a track record of success in a challenger company. So the challenger piece is really important to me, which is, I think what I underestimated when I left American Express to start CB Insights was people used to return my calls at American Express all the time. And I used to think it was because of me. And it was actually just the name, it was actually the logo on the business card.
Yep.
Right. And so, so somebody who had a lot of success at, a high flyer company that
Right.
everybody
They're at
knows
Google.
about.
Like everyone's going to call you back when you're
Yeah.
at
So
Google.
Google like wouldn't work because it's N+50 from us. Plus, it's fun to sell
Yeah.
when you're a
Yep.
monopoly.
Yep.
So that didn't work. Right. And then as I talked to folks, I just had certain things that I was looking for, right? When I got late stages with a few folks, one, as I talked to references, like I wanted to see like extreme followership, right? Like meaning not like people who are like followers and like they don't think
like
way.
where the executives go with them to the
Yeah,
next
like
thing
where
and
their
stuff.
references were like, oh yeah, like I'd love to come. I'll be there tomorrow, right? Like that was a
Oh,
big one.
wow.
And then
Okay.
the other
Interesting.
one was I really wanted somebody who had good instincts. I always would ask this question, like, hey, you come in, what's the first 90 days look like? And if somebody told me like their first 90 days was like they'll do a listening tour, like it was over immediately, right? Like I
Because
wanted,
that's the classic answer,
yeah, I
right?
hate like
Yeah.
that. It's such a pat answer, and it's like kind
Yeah.
of nonsense because it's like, okay, you're going to listen for 90 days, so basically nothing's happening in year one, right?
Yeah.
Like I wanted somebody who like because I'd shared data with
Because they,
some.
by that point, they already know a lot about the business. They know about some of the other execs. They know about lots of things. So like,
Yeah,
hey,
like
I don't know everything, but here's 3 things I do know that I need to, I would do.
yeah,
Right.
like and so I'd share data with, folks prior in the interview process. So
Yeah.
like, I wanted to see that they had hypotheses and that like, they were mostly right, like that their instincts seemed to be driving them in the right direction. And so yeah, I looked a lot for that in the hiring process. And then, once the person was, we hired and landed in the role, then it was all about transitioning and prepping
And
them
did you
for the
care if
role.
they were a CEO before, or were you willing to say, okay, I'm going to have someone to like step into a CEO role, even if they've never been one before?
Yeah, it didn't have to be that they had to been a CEO. They had to have led like a big go-to-market organization.
Yep.
Like that
Okay.
was probably the number one criteria.
So you wanted someone who came from like that go-to-market side of
Yeah,
things.
yeah. And then, but who had maybe kind of seen, I think the ideal profile was somebody who had built a startup or done a startup, also then done scaled the company, to the N+1, N+2 stage from us. And yeah, I think we were fortunate in that we found that. And then, then there's the hiring. A lot of spent many months with Manlio, who we ultimately hired. And then once he landed, then it was all about figuring out how to ensure that he's prepped. But actually, interestingly, I think that I was prepped, right? Because like 14 years in a business, like there's probably a lot of things I could have done wrong in the transition.
Yeah.
And so I spent a lot of time talking to founders who had transitioned out. I talked to some like just killer investors who invested in like the best companies in the world. And I asked them, when you've done sort of this founder to exec chair transition, I just asked them, like, what have you seen done that made it go really badly? And so I just zeroed in on those stupid things.
Just not do those
Yeah.
things.
And it was like, I'm just not going to do those things. And I heard some recurring themes, and it was like, okay, I think I'll just need to be vigilant.
Because one thing I can imagine is just like, there's a muscle memory of all the other people like going to you and asking your thoughts on it and stuff. And at some point you're like, hey, you shouldn't go to me. You got to either solve yourself or go to the CEO now. Like I'm only here for these very small number of things, right?
Yeah. Well, yeah.
You don't want to be like getting involved where the CEO should be getting involved.
Yeah.
Or
so I think the reality there is I'm a ghost. Right? Like Manlio is a killer. He's the CEO. He and I chat regularly, but I don't, unless I like to think of it as I'm an invited guest now.
Yep.
Right. And so if he needs support or help or wants me to weigh in on something and talk to somebody on the team about something, some product thing or whatever, like research thing, he'll be giving them a heads up that, hey, Anand's going to reach out. But like, I'm not slacking with anybody, communicating with anybody unless, it's sort of with his, unless, he and I have chatted about it before, or, if it's sometimes customers still just know me and they'll send me something. So then I'll forward it on to the CS team or whatever, and I'll just CC him so he's aware. But it was really important to make sure that like, it was very clear to me, to him, to the organization that like he's in charge. And I'm here, I'm obviously on the board, so I'm here to be helpful, but it's only when at his direction. So yeah, I think I've done, I'm curious what grade he'd give me, but I think I've done a pretty good job on this transition. We have a really great relationship and we talk regularly, and so we're pretty open about things if they aren't, if they're maybe not going great. But yeah, it's been great, and I think it's been was like a big change, but I think it was like absolutely the right thing for everybody on the team and for CBI and for myself.
Now you're prolific on Twitter. I actually follow you at a Sanwal on Twitter. And what I love is that you don't really take yourself too seriously. Like what's kind of your personal brand strategy?
So I don't have like a personal brand strategy. To be really honest, I like hate the whole concept of personal branding. I think personal brands are an outcome and like they're an output, not an input, right? Mm-hmm. Like if you do good work or say interesting
or just keep doing this, whatever you do, because you like result, something.
Right. And I've had this debate with like folks on our team at CBI who are younger than I am about this whole thing. And I just feel differently. I think ultimately, like on Twitter, or our newsletter or LinkedIn or wherever I might post, like I try to write like I talk. So my friends who've known me for a long time will read some stuff and they're just like, oh yeah, like I could hear you saying that.
Okay.
And then I think the bigger things with the social channels that's maybe not as obvious is that I use them as like a open mic night, like, the way comedians try out material. Not to say I'm a comedian, but like, I'm going to try a research idea out, or I'm going to try some new idea out.
And see if it starts getting some traction, then maybe invest more in it.
That should go into the CBI newsletter, or that should be a research product, or that's like, that's a vein that we should tap into. So, I'll write some stuff there. And like, sometimes I've even heard from members of the CBI team, like, yo, that was a little bit extra. Right. And I'm like, I'm just trying stuff. Right. And like, sometimes it's going to miss. And that's okay, because it's kind of like it gets subsumed in the feed so quickly anyways. Like people forget,
exactly.
Right. And I'm not going to do anything like really crazy that's going to
get you're not going to do something too out there.
But like, it is like an area where I can just do kind of quick experimentation. And sometimes it's like, I'll even try like just subject lines for the newsletter. Right. I'm like, I'll try a post and then I'll delete it and then I'll retry it. And sometimes the second one works better, different formats. So yeah, I think it's just a great way to see what resonates and what doesn't. And yeah, the personal brand thing, like if that is an outcome of it, that's okay. The other thing I don't like about the personal brand thing is like, then I think to do it really well, you actually have to be this sort of one-dimensional character.
You have to be consistent too, right?
And it's like, I don't know. I like a lot of different things and I like to bullshit about a bunch of different things. And I don't want to be like, oh, people will think that that's not part of my brand. Like,
Yeah.
Again, that is great for folks that are like trying to build that, but that's just like that's not what I'm in it for.
Now, two last questions I want to ask everybody. What is a conspiracy theory that you believe?
Okay. I love this question that you ask it when I listen to the podcast. I think this is always really telling. So mine, you can grade how far out there this is on the conspiracy spectrum. My fundamental belief is that I don't think the education system in the USA is actually focused on teaching kids how to be literate and numerate and how to think. I think it's actually primarily focused on teaching conformity and compliance and what to think. And I think ultimately success is getting you to sit in a classroom for 7 hours a day so that you can eventually go to college and then eventually go to work and sit for 7 hours in a cubicle. So, and so I don't think it's about numeracy and literacy, which I think is a shame. And I think like I've been digging into a lot of the data around the outcomes that our kids are getting. And I'm a public school product, and like it's sad like what we're doing to kids in this country. And it's not because they don't want to learn. I think it's just because like the education system's architected in a way that it's about conformity and compliance and teaching you how to think. So, that's
it's interesting because like there's certain things that like there's lots of different ways to learn stuff. Like Duolingo teaches language pretty well. And so if you just made sure the kids like, instead of taking whatever Spanish or French or something like that, they just watched them, just made sure they were actually doing Duolingo during that class, they'd probably learn a lot more than they would from the teacher there. And so there's probably like a lot of little things you could do to increase if your real goal was increasing learning, which I don't know that is, but that there's a lot of ways you could increase learning a lot faster.
Yeah, I think we've forgotten who the customer is, right? And so I think there's things that work, just as an example, like the model of cram, exam, erase, which is kind of like the prevailing model to learn stuff, right? Where you basically, you purge it from memory after you take the test, right? Like there's no long-term retention there, and that everybody recognizes that. And there's proven methods of like, quizzing students regularly for mastery, like leads to long-term retention, right? But it's hard to do, right? And so I think a lot of times, like we try to make the class exciting and interesting because I think teachers want it to be exciting and interesting because it's exciting and interesting for them, right? And like there's actually education science here that says these things work to create the right types of outcomes. And then I think the other big thing with conformity and compliance is that like we have a system for even at its best, it creates kids who are really good at reading maps. Like, and I mean in the sense of like they know how to navigate and check a bunch of boxes that help you get into the right high school and then help you get into the right college and that help you get into the right job. It's actually not set up for building kids who are explorers, right? Like the kids who are actually going to build a map, it like does nothing for them, right? And so it's so even at its best, it like still is about creating conformity and like just having you check a bunch of boxes. And so I think like and I'm a big entrepreneur. Like I think entrepreneurship is like is a phenomenal art, and so like I think we should be creating mechanisms for more kids to like become explorers who like don't just read a map but who develop a map. So there's a whole like I can go on forever on this topic, but I do think like the education system in the USA is pretty broken. I imagine it's might be similar elsewhere, but I've spent the most time.
It's interesting. I'm in the middle of a book called Bad Therapy.
Okay.
Which is like, it's so interesting. It's very
dad therapy or bad
BAD therapy.
Okay.
And the premise is that so many kids today are in therapy.
Okay.
But therapy is like a very, very it's something that can help people very acutely and especially for adults that need help and can understand when the therapist is kind of pushing them the wrong way, et cetera. But for most of kids, like they glean too much on what the therapist says And, everyone knows therapy can both do well and cause harm, right? Just like a surgeon, right, can do well and cause harm at the same time. And so you don't just go for surgery when you don't need it. And you need a lot of thought. Just because a doctor suggests surgery, you need a lot of thought sometimes to decide whether to do it or not. And so it's really kind of diving into how so many kids are on it, and where in many cases is actually doing more harm than good.
Oh, wow. Okay. Yeah, that's really interesting. Yeah, I think, we should chat separately at some point. I'll give you another book, though. It's one called The Case Against Education. If you've read that, by Brian Kaplan.
Brian Kaplan, he's great.
Yeah, it's definitely led to the most arguments between my wife and I.
Brian lives near me, so
cool.
I've had him over for dinner before, and just nice. A super fantastic, interesting guy.
Yeah, no, I love that book. So,
all right, last question we ask all of our guests: what conventional wisdom or advice do you think is generally bad advice?
So I'll go back to the company building kind of side of things. I think the thing that I heard a lot, and maybe this was a ZERP era phenomena, was hire good people and get out of their way. I think this is abjectly horrible advice. Like the job of a manager, like it's in the name, like you have to manage. And that means you need to have mastery of details. You need to inspect things. I think it often, people immediately go to like, oh, you're micromanaging. And like, there's a whole spectrum before you get to micromanagement. But I think the hire good people and get out of their way, like often what that led to was abdication instead of delegation. And I don't think organizations get better. I'm not sure teams get better by doing that. It just seemed like an easy way for inexperienced managers to like not actually have to help their teams and help their people get better. So I think that
it's interesting because that's also the advice. Like I think a lot of venture capitalists give that advice: hire good people and get out of the way. And I think like in a venture, if like you're running a venture capital firm, I think actually maybe that actually makes sense because you're hiring a very small number of like super elite kind of people. And it's very decentralized and there isn't a lot of coordination. And so actually, I think like if you had a 6-person venture capital firm, you hired another partner, like it makes perfect sense to do that. But it actually isn't good advice, like to actually go to like a software company or something.
Yeah. I mean, I think if you look at like some of the legendary founders, of recent or even
they're old, in the details.
Brian Chesky or Jobs or Travis Kalanick or Elon Musk, they care about the details and they understand those details and again, they probably and hopefully in many of those cases also do a good job of empowering the right people and hiring the right people. But I think like under the veil of micromanagement is bad. Like, there's just, we've probably let a lot of bad management kind of pervade our systems and our organizations. And hopefully people kind of stop taking that advice.
All right. Thank you, Anand Sanwal, for joining us on World of DaaS. I follow you at Sanwal on Twitter. As I mentioned earlier, it's very fun to follow you there. So I definitely encourage our listeners to engage you there. This has been a ton of fun.
Awesome. Thanks, Auren.
And if you're a super data nerd, go to worldofdaas.com. That's DAAS, worldofdaas.com, and sign up for our weekly Data as a Service news roundup newsletter. Thanks for listening. If you enjoyed the show, consider rating this podcast and leaving a review. For more World of DaaS, and DaaS is DAAS, you can subscribe on Spotify or Apple Podcasts or anywhere you get your podcasts. And also check out YouTube for videos. You can find me at Twitter at Auren, that's AUREN, Auren, and we'd love to hear from you.